Hey gang, Akil Stokes here of TradingPower.com and welcome to the weekend review. The question I have for you today is, are you looking at your trades the wrong way? In this week's video, I'm going to go over two examples, one of being a good trade, one of being a bad trade, and seeing if you can figure out which is which. And I'm also going to show you a clip from Thursday's live room session that takes a little look at how to think like the other trader. So sit back, relax, and enjoy this week's video. All right, gang, thank you for hanging in there. And before we get started, I just want to say thank you for viewing this video. If you are one of the 2,000 plus members that tune in each and every week to listen to me talk and go through some charts, I just want to say I really appreciate it. Many of you guys don't know this. Although these videos are about 15 minutes long, it really takes me a good part of the day to record it, produce it, edit it, and all that good stuff. So knowing that you guys are out there and leaving positive comments just fuels me to do this each and every week. Now, I do have one favor to ask you before we get started. If you enjoy, fix the mic. If you enjoy what you guys are seeing, do me a favor. Please like the video, please subscribe to the video, and please go on, or subscribe to the video. Please go on those social media sites, whether it's YouTube, Google+, Facebook, Twitter, and just share the video. The more people we can get involved each week fires me up that much more and allows me to keep bringing you guys this good content. Now, today, as I mentioned earlier, we're going to take a look at two different trades. One's going to be on Aussie dollar. The other one's going to be on the Euro Aussie. And these are two trades that I looked at during the week. One of them I actually took and brought through the syndicate and ended up taking a small loss on. The other one was one that I was in conversations with a few of our syndicate members all week long and predicted the trade, but didn't end up pulling the trigger because it didn't meet my rule set. So we're going to take a look at those two and try to make a lesson out of it in determining the difference between a good trade and a bad trade and a profitable trade and I guess a losing trade. And too many traders, especially beginning traders, they have the whole mindset wrong. They automatically think that if a trade wins, it's a good trade. If a trade loses, it's a bad trade. And really, that's not the case. You got to kill that process. It should be rather a good trade is one where you followed your rules completely 100%. A bad trade is one where you break your rules. A good trade could be one where you follow your rules and it loses. And guess what? That's what happens. That's part of trading. If you can't accept losses, you're in for a bumpy ride. A bad trade can even be a winner. You can have a trade that is your biggest winner ever, but if you made a mistake during the entry, if you made a mistake during analysis, if you made maybe an emotional decision hopping into it, guess what? That's still a bad trade. And although it feels good at the moment because you're swimming in the money, over time that's going to eat you alive. And it's if you're just getting started and you get one of those, it reinforces a bad behavior, which any of you guys that have kids out there who have worked with kids is not a good thing. So let's dig a little deeper into those trades and take a look at the two I'm talking about. All right, gang, the first trade is here on the Euro Aussie 60-minute chart. And this is a structure-based trade, a CTS trade, combined technical score type trade. And it's pretty simple. First of all, we had a structural level looking left. This gray box you see is a DSR level. It's one of the indicators we trade with here at Trading Powered. Stands for dynamic support and resistance. Basically, it's a visual indicator of where structure is at, and we can based on higher time frames. So, for example, on my chart right here, the 60-minute, this gray box is going to represent a structure level on, I think I have it set to the 2-hour chart, the 4-hour chart, some higher time frame, and then I'll have a red or a green box set to like the daily chart. So when I see structure levels like this, I look for a counter trend opportunity. And, well, following Euro Aussie up, if I take my Fibonacci extension tool, swing low to swing high, and back down, you're going to see, and let me see if I might have taken this long one. I might have taken this full move right here. All right, we take our Fibonacci extension from our swing low to swing high right here. I'm going to get a 127 Fibonacci extension right there. Lining up, look left, structure leaves clues. What I was looking for as the market went into this area was a few things. The first thing was for the RSI to go overbought. I have my RSI settings to 80 for my overbought and 20 for my oversold. And you can see as we spiked up into this level right here, our highest high at the moment, our RSI indicator was indeed overbought. Now, because I'm a conservative trader, and for both of these trades, I want you to put yourself in the mindset of a conservative trader. Because I'm a conservative trader, I didn't want to sell right away right here because, well, there was really, other than a Fibonacci, other than the RSI, there's nothing really telling me that, hey, the market is ready to reverse here. So what I want to do is wait for a simple pattern we call a double top, and that's when the market reverses off its initial high. We come back up to retest it, and we have trouble. We cannot create a higher high, higher close. And you can see we did that right there. If I draw on a straight line at the top of this close, you can see the market actually hit it, or tried to get past it 1, 2, 3 times, and on the 4th time it was rejected. So a nice double top right there. Going back down to the RSI, you can see we also have some pretty good RSI divergence, meaning our highest high right here is where the market went overbought. Then on our two tests afterwards, you can see we have lower highs on the RSI. Now, obviously, you can see this trade wasn't a winning trade for me. I had stops right above these structure highs. I didn't want to waste too much because it wasn't really a high CTS score trade. So I had stops right above previous structure highs here, and you can see we got stopped out before the market eventually rolled right over. So this was a losing trade, guys, but it doesn't mean it was a bad trade. This was actually a good trade. Why? Because I followed my rules. I did everything that my plan told me to do. I didn't jump on emotionally during the initial test. I waited for a retracement. I waited for a retest. I checked my RSI. I added my CTS score up, and the trading setup gave me everything that I needed to see in order to execute the trade. So although it's a losing trade, it's still a good trade because I followed my rules. On the other hand, if we go down to the Aussie dollar trade, sort of a similar setup. You can see Aussie dollar, what we had was an ABCD pattern right here. Swing high to swing low, copy and paste that, add it on. A beautiful ABCD pattern. If I take my Fibonacci extension tool, you're going to see that there's a 1618 Fibonacci extension down here, and we're right above structure. Now, the discussion that I was having with a few syndicate members on this trade was, well, first of all, we didn't really trust Aussie. If you've been following Aussie for the last couple of months, you'll know why. But the key was that one of the keys was that we have a DSR level down here, but our ABCD pattern didn't quite reach it. And in order to take this trade, again, we would have to, similar to the Euro-Aussie trade, we would have to wait for some type of confirmation. So for the market to not only get down to that level, but for us to get a little retracement up, to get a pullback, look for some oversold on the RSI, look for some divergence, and really an indicator that the market says, hey, I'm ready to turn around, I'm losing steam. You can see we did not get that. We didn't even go oversold on this first test down here. And really that first test was the only test. And the trade did, Aussie did have news on Thursday. Excellent news, by the way. We rallied up. But guess what? I didn't take the trade. And for me, that was a good trade. Now, say I would have taken this trade. Say I would have been lining this up. I would have been watching the market live. I'm watching this candle spike down, spike down, spike down, saying, okay, well, it's going to go down to structure just like I expected. And then see it get sucked all the way back up. What's going through my thought process is probably this, again, putting myself in the shoes of a newer trader. Oh man, this is where I predicted it to go. The market's running away without me. I'm losing profit. It's gonna go all the way up. I'm gonna miss it. Boom. Let me hit my at market buy order right here and say this red line. So now I'm involved in a trade that I shouldn't be in because I got emotional and I thought that the market was gonna take away my profit without me being on the money train or whatever else is going through my mind. Now, what's even worse about this scenario is, guess what? You can see the market went on the win. The market came to this level. We went from 89.20s to, we went over 100 pips directly up, essentially. And it's hard to wrap your fingers around that. If I were in this trade, although it's a winner, although it's a very profitable trade, I would have to consider it a bad trade because I didn't follow my rules. And I mentioned this earlier during the intro that it's a curse for traders that hit a trade like this because, well, once you enter a bad trade, once you know you broke your rules, but you see it pay off in your favor, it just allows you to think you can do it again. It's kind of like a kid. If a kid does something bad, the parent sees it and they get away with it, even though it's bad, what does the kid think? I can probably do it again because it worked last time, right? And traders will think the same thing. It'll be hundreds and hundreds of scenarios in the future where you'll get a trade, you'll get emotional for one reason or another, and you'll say, I know I'm not supposed to enter this right now. I know I'm supposed to wait, but I really think I should. And then what do? Well, we look back into the past. We look at past memories. Well, last time I entered that Aussie dollar trade and broke my rules, it still ended up winning. We associate that good feeling of winning with the current trade. We enter the current trade in hopes that we're going to win again. It's the excuse we use to get involved, I guess you can say. And well, just over time, that will demolish your account. Trust me, I've been there. I have been there. I've gone through a stretch where I hate to say getting lucky, but I get lucky trade after trade after trade. And I used to go through this series of drawdown, one lucky trade. And it was that one lucky trade that made me think, oh man, I'm good. I'm just going to do it again. And it took me so long to break that pattern. That's why I want to spend some time talking to you guys about it today. So very important. The moral of this long drawn out story is the association. Good trade doesn't mean profitable trade. Bad trade doesn't mean a trade that goes into drawdown. Good trade equals did I follow my rules, win, lose, or draw. Bad trade equals I broke my rules, win, lose, or draw. Very important to get that through your head and try your best to remember that. Now, I'm going to have to cut the next video a little short because I spent a little too long talking about this, but I'm going to show you a clip from Thursday's live room session where we kind of talked about thinking like the other trader. Meaning that if I'm a trader looking for, say, a bullish entry, part of my IPDE, identify, predict, decide, execute, is putting myself in the shoes of a bearish trader. If I'm a bearish trader that's already involved in this trade, where am I looking to take profit at? Where are my stop losses at? Because little clues like that are going to help tell us where can I get the best entry? Where is the market likely to reverse next? And, blase, blase. So let's check that out, and I'll see you guys when we return. Let's run through our process. I'm going to ask you guys for help. Identify, predict, decide, execute. And humor me with participating. First thing is identify. What do we see here on the chart, guys? What do we notice? Don't make me call on you guys. What do we notice? What has price action just done? It's hard to see with all these little arrows in there. Yep. Higher high, higher close, right? So we identify what happened. We have a new structure high, higher close. We know, what does that mean? That's the first signal, the first pluck in the head that says trend continuation. This market should continue in the overall direction of the trend. Our most recent trend is up, right? Nice little wedge pattern in here. Predict. Our next clue, predict. What's our prediction for the market? We already said the market is going to go up, right? Or that's what the market tells us. Where are we going to go to? Where's our next stopping point if we continue up? Zach says red DSR, right? Major structure. So somewhere in this level right here between 91.16 and 91.32, right? All right, so we identified what the market is doing. We predicted where the market is most likely to go. And we actually have the second part for prediction. Our bigger prediction is that the market's going to come up here, right? Now, Gene mentioned the 127 extension from this move right here, swing low to swing high, and back down. And actually, I'm gonna have a 1618. You might have taken a different move. I'm gonna have a 1618 right here at 90.98. All right. So we have a 1618 Fibonacci extension. May have an ABCD pattern too. Not quite. We have an ABCD at your 90.90. We have a 1618 extension at 90.98. What do we know about the 91 even handle? What type of number is that? Psychological number, right? So we've got a Fibonacci extension. We've got a psychological number. We can expect, RSI is overbought. We can expect the market to run out of a little steam, right? Let me ask you this. If you were long right now, If you were long in this trade, would you be looking to take targets off around this area? Yes or no? If you were long, would you be looking to take maybe half a position off at 90, 98, 91 even? Fibonacci extension? Probably, right? So you got to think some other traders that are long. I'm sure people are long. There's probably some people in the room right now that are long that didn't let us know and are hogging profit for themselves, right? See, Jade took money off at 90.90. All right, we got to think there's probably some sell orders up there, right? Some sell limit orders. So we can expect the market to retrace off of there. Okay, so I hope that little clip was somewhat helpful. Before I leave, I want to share this one thing with you guys. It was an email that I got this afternoon, and it's funny that it goes right into the topic of this week's video. But it was from a former client of mine, and that I haven't spoke to in a while, by the way. And he says, Kill, thanks for the excellent 2013. For the short 4 months you taught me to trade, ? Actually, no. Patterns, yes. Structure, yes. Entries, exit, yes. However, you never taught me how to trade. No. You taught me much more, my friend. I got discipline, procedures, emotional control, and a winning attitude. It made my year. Thanks, man. And this is just another note to the topic we've been discussing all day. It's the psychology that matters, guys. It's not the strategy. It's not the technique. We're not doing anything secret over here. You know, we don't have a secret lab with strategies that only Jason knows, only I know, only Darren knows. You know, it's the psychology that matters most. It's putting yourself in the position to succeed, whether it's creating a trading plan, a trading routine. It's that type of stuff. And he goes on to say, I'm not going to read the whole thing, but blah, blah, blah. Back to my training and to my point, thanks. Sorted myself out during AKA strategy, checklist, procedures, rules, defined asset portfolio, emotional balance, control of my end of the business plan from higher level goals like consistent profit. Discipline, peace of mind, to leave stops, never pull targets out early. Just going through the list of many things that he found during the training period. And again, it's really great to hear this because I work with a lot of traders on a regular basis, whether it's through my training courses, the live room, or the syndicate. And, you know, I've gotten to the point where I can really get a tell for who's going to be successful and who's not. And the clue and the key is it's, you know, yes, certain people pick up on the skill faster than others. I'll get certain people that, oh man, it's an ABCD. Look at that Gartley there. Oh, trend continuation real quick. I get others that are, wait, what is a candlestick again? Or maybe that's a reach example, but I get others that, you know, it takes them a while to get used to it. But the ones that succeed are the ones that really understand what's important. And that's the emotional discipline. That's the psychology. And as this trader mentioned, you know, you don't just use it in your trading, but you really use it in your entire life as well. So I'm glad I got this email and I'm glad I can share it with you guys as well. So that's it for this week. Please like the video. Please share the video. Please subscribe to my YouTube page so you can get this each and every Thursday. I know this was an interesting topic, so if you're going to leave a comment, don't flood me with emails. Just leave it underneath the YouTube video, and we can probably start up a good discussion on there. I know half of you are probably disagreeing with me. Half of you are probably getting it. I don't mind the criticism, so let me have it. But thank you for joining me. I will see you guys. I won't see you next week. I'm going to be out of town. I'm going down to the Trade Empowered headquarters. So I'll probably see you the week afterwards. But in my absence, check out the page. There's over 100 free training videos in there. And as always, plan your trade your plan. And you have a great trading day tomorrow and a great weekend.